Hi guys, welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. Well, it could be a blockbuster Friday given the fact that we are very close to that 25,000 level on the index. 24,800 is where we shut shop. And looking at the Infosys ADR overnight, it rallied somewhere around 8% on the back of stellar show in the first quarter. So will that fire up the index, and can we look at that 25,000 level in today's session itself? That's the big question today. Of course, lots of other stocks in focus. You have a very earnings heavy day today. Reliance Industries, BPCL, Wipro, JSW, lot of these numbers are poised to come out today. So yes, it will be an earnings heavy Friday. And aside of that, all your stock related queries will also be addressed on the show over the next 30 to 35 minutes. So if you have any queries, keep them coming in on our live feed on YouTube and we'll try and get them addressed. But as usual, before we move any further, let's take a look at the top headlines for this hour. Stock sell-off on Wall Street. The Dow snaps a six-session winning streak. The S&P 500 and Nasdaq also slip as investors continue to rotate out of mega-cap tech stocks. Asian markets open lower while the GIFT Nifty is suggesting a slightly higher start for the Indian market. Crude prices give up some ground after a strong rally. Brent slips below $85 a barrel even as US crude inventories decline for the third straight week. Meanwhile, gold prices trade near record levels as hopes of rate cuts remain high. Infosys reports strong growth after 5 quarters of weakness. The company raises FY26 revenue growth guidance to 3.4%, higher than earlier estimate of 1 to 3% growth. Margin beats estimates, rises 100 basis points to 21.1%. Reliance Industries is expected to report marginal EBITDA growth with muted numbers seen from Reliance Retail and Jio. Gross refining margin in the oil and gas business is also expected to be lower. And another key earnings to track. Wipro is likely to report positive growth after a gap of 5 quarters. Ultratech Cement's realizations are likely to decline, while the street will also be watching out for numbers from Paytm. Well, 9 minutes to go for the markets to open, but I want to just point out that Reliance Industries is also reporting numbers today, and it could report marginal EBITDA growth with muted numbers seen from retail and Jio. Of course, that is one big stock to watch out for today, given the fact that it was one of the top contributors on the index as well. But let me just quickly take you through the cues for trade. Yesterday, we shut shop around that 24,800 mark. It was another record close on the index. In fact, talk about some of the stocks that will be in F&O ban. Well, quite a few of them. We will be, of course, going through all that also, in just a bit. But aside of that, what will be in focus would, of course, be Infosys. The ADR rallied somewhere around 8% or thereabouts, in overnight trading session, and would that have a rub-off effect on the stock prices here as well? That's something to watch out for, because in the run-up to numbers, we saw 2% kind of an uptick on shares of Infosys. And yesterday, of course, IT Pack was leading from the front with gains of somewhere around 2% or thereabouts. On that note, let me bring on board, Ashutosh Sharma, Head of Forrester Research India, to talk about how Infosys numbers have panned out and whether or not, IT companies are out of the woods now. Ashutosh, great to have you on the show. It's been a positive surprise, right? The likes of TCS, Infosys, HCL Tech, all of them have reported numbers. But let's talk about Infosys in particular, since the numbers came out yesterday. Would you call it a blockbuster show, given the fact that we've seen improvement in deal TCV as well? Guidance has been raised. Are we out of the woods when it comes to some of these large cap names?
Good morning, Nandita, and good morning to all of your viewers. Thank you for having me on the show. I wouldn't call it blockbuster. I think blockbuster is probably still some time ahead, but it's a step in the right direction, considering that we had been in the woods for many years, for many quarters preceding this quarter. So Infosys performance especially comes as a breath of fresh air, especially considering the US economic environment, which is their major market, and for that matter, West in general, hasn't improved significantly yet. So if they are able to perform like this in an environment like this, and I think similarly for TCS as well, I think better days are probably ahead. We had been talking on this show back in Q4 of last year, and we had expected that by now the economic environment will probably start to look up, but the uncertainties with respect to the elections in the US still remain. Even though the UK is past the election and the stability is probably going to come in next few weeks. But overall, the environment still remains uncertain. So, in that environment, achieving the numbers that they did, I think it's a pretty good achievement. But I'm assuming as things stable, as macro environment improves over next few quarters, things should look up even.
Okay, one more question on guidance, Ashutosh. Jefferies, I was just reading a note by Jefferies this morning, and they've said that, given the kind of strong deal wins that, the company has seen, the guidance, which has been hiked to 3 to 4%, is still conservative. Would you concur with that view? Do you think there was, room for them to, perhaps give it higher guidance, or do you think this does justice to the kind of environment that they are operating in right now?
I think this is fine. See, if you look at the growth that came in last couple of quarters, and especially last quarter, it has come on the back of large deal momentum, right? And that large deal momentum had been building over last few quarters, primarily because customers were looking to consolidate their vendors, and it was primarily around cost takeouts and vendor consolidation type of deals. As we go forward, I think they are reaching a bit of a saturation in that space, and the new growth has to come on the back of rise in discretionary spend, rise in transformation type of initiatives, which still are a bit uncertain. So I think Infosys is being a bit cautious there, which is probably fair to expect from them. At the same time, there are certain undercurrents that are at play with respect to the Gen AI and the rise of and increase in captives, which is also keeping the momentum in check. So I wouldn't say it's too conservative, considering that the environment is still not fully recovered or not likely to be the same it used to be say many years ago.
Okay, right, point taken. But what about TCS? It did point out that the deal pipeline in terms of AI is somewhere around $1.5 billion, and they have said this, that they want to become AI first. In terms of, TCS was the only Indian company which had, marked out revenues from AI as well, right? But going forward, do you think the AI pipeline has improved? Because, a lot of these deals, $1.5 billion worth of deals, may not really have been signed yet. Do you think that they will translate into revenues going forward in the next couple of quarters?
Right. I think it's the Infosys which is calling itself AI first, and the TCS is the one which declared how much momentum or the revenue that they can generate out of both AI and Gen AI. I think it's not. So just want to make sure everyone understands that. The reason why I want to highlight that includes AI, because AI has been around for some time. It had started to lose steam a bit a couple of years ago when Gen AI came in, and it gave a new fillip to the entire AI momentum. So what will happen over next few years? AI will become the new digital of, say from 10 years ago. Everything will start being classified or understood from the prism of whether it involves AI initiatives, AI projects, or AI related work. So yes, AI will drive the momentum. The only what it will also do is it will drive a lot of downstream, because AI in itself is not something you can do without having addressed lots of other technical capabilities that you need to put in place, be it around having the right sort of infrastructure, with the right mix of cloud, having the right sort of data and analytics capabilities in place, and also cybersecurity and others. So for you to be able to drive AI momentum, the rest of these things need to be put in place, which is what organizations will ask companies like TCS, Infosys, Accenture, and others to do. So yes, right now it's 1.5 billion. You can expect this number to go on to a bigger number as we go forward. And everything ultimately will revolve around AI in, say, 3 or 5 years from now, because every project will have at least some component of data and analytics and insights, and ultimately intelligent insights driving the business processes.
All right, that's the view then. With that, I'm afraid, Ashutosh, we are running out of time. I would like to thank you for taking out time and joining in and sharing your thoughts on the IT pack this morning. Look forward to having more conversations with you.
Thank you, Nandita. Nice to be there. Nice to be here.
Thank you. Have a nice weekend. With that, let's take a look at some of the stocks that will be in news today. Of course, we were talking about the IT pack. Wipro is another one that will be reporting numbers today. if you, in terms of expectations, of course, macro issues are likely to play spoil sport for Wipro in the first quarter. Net profit is expected to rise somewhere around 4% on a quarter-on-quarter basis. Revenue from operations are likely to remain flat, and the key to watch out for will be commentary on new management's strategic initiatives when it comes to AI. And signs of recovery in BFSI and healthcare, whether there are any signs of recovery, that's something that we'll be watching out for in terms of commentary from the management. Let me figure out if we have our technical guest ready at this juncture. Well, no, not really. So, other stock, the other stock that will be in focus would be Reliance Industries. Of course, numbers will be coming out today. Expect modest earnings growth in the first quarter. Telecom and retail, these are the two segments that are expected to drive earnings for Reliance Industries. Decline in oil to chemical business may temper growth in the first quarter, and Q1 revenue per se is likely to grow 12.5% on a YOY basis, and profit is expected to rise 0.6% or thereabouts. In terms of Geo, of course, Geo has been the market leader when it comes to market share, and it is expected to see some bit of a bump up in its ARPU as well. But on that note, let's see how much time is left for the markets to open. Just about, I think, 20 seconds to go. For the markets to open, waiting for the opening bell. Then we are expected to open higher, even though the GIFT Nifty was fairly muted. In the pre-open, of course, we can see a 40 point kind of a bump up on the Nifty. Yes, that's correct. We have opened up, in the flattish zone, but it is with a positive bias. 20 points up for the Nifty. 24,800 is where it's at. Sensex is marginally in the green. We are, the direction right now, of course, is undecided, but the mid-cap index continues to extend its losses. 0.4%, kind of a cut that has come in on the mid-cap index. Even the Sensex and Nifty have now drifted lower and are trading in the red as we speak. The Nifty Bank Index as well is trading with cuts of somewhere around 150 points or thereabouts. But what I want to see right now is the Nifty IT pack. Let's see whether there has been some bit of reaction to the kind of numbers that came out from Infosys. Yes, a 1.5% uptick after a 2% uptick yesterday. Yesterday as well, if you saw on the Nifty 50, the top 5 or 6 gainers were from the IT pack. You had TCS, Infosys, HCL Tech, all of them among gainers. And today as well, when you look at the gainers, LTI Mindtree, that was the top Nifty gainer yesterday. So LTI Mindtree, HCL Tech, TCS, Wipro. These are the 4 gainers. I want to see what Infosys is really doing at the current juncture. Flattish, at best. But LTI Mindtree is seeing, a better move compared to what Infosys is doing at the current juncture. Infosys is up 3.5% as we speak. So yes, it is a healthy up move coming in on Infosys. Top 5 or 6 names from the IT pack among top Nifty gainers. On the flip side, what's not doing well is Power Grid, Ultratech Cement ahead of numbers, Eicher Motors, BPCL as well ahead of numbers, trading in the red, Hindalco, NTPC, Tata Steel, HDFC Life, some of the metal names and life insurance names are under pressure. On that note, let me check if Raja is joining in or now at the current juncture. Okay, let's get on board. Sahil Kapoor, who's the fund manager at DSP Mutual Fund, joining in this morning. Sahil, first of all, what do you make of the kind of numbers that have been trickling in from the IT space? TCS was a positive surprise yesterday. I mean, a lot of these analysts that we spoke to have called it a stellar or blockbuster performance by Infosys. ADR saw 8% uptick today. Infosys top gainer 4%. Do you think the worst is out of the way when it comes to revenues? Have they bottomed out? And secondly, the kind of up move that we've seen in the IT pack over the last 30 to 45 days, valuations wise, do you think they are once again in getting into the expensive zone? Your thoughts?
So Nandita, on the whole, I think the results are still soft. We are still seeing revenues are not accelerating. It's quite possible that the decline has stemmed, and so far we are not seeing any sequential worsening of the trend. So that is one thing which has happened. So you could possibly say that the declining trend seems to be abating. So that is what numbers have shown us. Second, I think there has been a lot of margin protection or improvement for a number of IT companies, which has largely come from cost control. So my guess is that we should not confuse this for a full stack revival. And second thing is, in terms of performance, the IT pack has underperformed over the last 2 years or so. Markets have done remarkably well, while IT has been more or less sideways. And recently, the IT index did make a new lifetime high, but nonetheless, the performance is still subpar when you compare it to the broader market. So my guess is that the index or the sector is still going through consolidation. In terms of financial performance, I think the results are still yet to improve significantly. It's anybody's guess whether it will happen over the next 3 to 4 quarters or so, but I think it is still in a wait and watch mode. Is there margin of safety in this sector right now? I think it is still debatable. It's not such a clear binary call to take right now. I think it is still muddy waters in this sector.
And what about the kind of updates that we've been getting from banks? We have a couple of marquee names that will be reporting numbers over the weekend. Loan growth, deposit growth rather continues to lag loan growth. So, do you think margins are expected to remain under pressure for private banking names, at least at the current juncture? And do you think PSU banks would again take the lead in terms of first quarter performance?
See, on the whole, the banking sector is still reporting, fine numbers. When you look at credit growth, continues to be close to 16% overall for the industry. So I don't think it's a matter of concern in terms of growth. Quality of growth is also still very strong. We are not seeing any uptick in non-performing assets at all. One important fact that you highlighted is deposits growth. That I think is still lacking. It hasn't really caught up with the kind of credit growth that we've seen. And one risk that the market is seeing, and possibly which could also be the reason why banking sector is not getting premium valuation like all other sectors, is this threat that credit costs where they are right now and the inability of deposits to ramp up could play a spoil sport for their NIMs. And this is, I think, the risk which is highlighted, or possibly the markets are discounting and still giving this sector average or below average valuations. But I think over the last 2 quarters, we've seen some bit of sort of comeback in terms of deposit growth slightly inching up, and eventually we've seen in most cycles credit growth creates deposit growth eventually. In this cycle, it is quite delayed. So over the next 6 months to 9 months, I think it will be interesting to see how this sector plays out. One distinction for BFSI and lenders particularly is that valuations are still average, or in some cases below average, below their long-term averages. So there, I think the margin of safety exists when you compare it to the broader market. So from an investment point of view, I think there are a number of opportunities that can be gleaned from this sector.
Right. Okay. Let's also talk about the markets then. The kind of levels that we are at the current juncture, very close to 25,000. And we have 2 more sessions to go for the budget, before the budget, right? So even if we hit that 25,000 mark before the budget or on budget day for that matter, post that, any expectations in terms of a disappointment in the budget that could trigger a correction going forward? And your year-end target, would you expect markets to remain around these 25,000 levels by year-end?
So Nandita, it's a very tough question to answer. Where will the market be by the end of the year? I have no idea, no clue how to, and based on data, I can't really tell you a number on that. But 2 things which are important today. One is that consumption in India is still very, very tentative. It hasn't seen a significant recovery. If you look beyond the luxury and premium consumption sectors, the tier 2, tier 3 and bottom of the pyramid consumption is still struggling. So if the budget is able to highlight that and correct that anomaly in the economy, it could be a good thing. And that will tell you how much focus is there on this part of the economy. One number that I could think of is what will be the YOY increase in revenue expenditure of the government of India. That number could be an interesting number. It has been hovering in low single digits, and I think that has been an area of concern for the market and possibly for some of these sectors. So that is something that we should look forward to in the budget, how much the government spends on revenue. And second and more important thing is What are the changes for taxation that can occur? Could also be a very, very important input for the market. There has been a lot of discussions around, what to do with a stellar increase in derivatives volumes in India, and the regulators have been, highlighting, giving inputs on, that area is a gray zone. So if there are any indications of changes in taxations in some of these categories, they could be market moving. So I think these two numbers are going to be very, very important. Changes in taxation and what is the extent of expenditure on revenue. So that could decide possibly the short-term trend in the market, but it could also decide the trend for the next 2 to 3 years.
Right, of course, we also mentioned about, how regulations are, or will be tightened where the FNO space is concerned. So, of course, we recently had reports suggesting that market regulator SEBI is looking at a two-stage tightening of norms for the FNO segment. The consultations with market participants are set to kick off yet, but the proposals include increasing the minimum lot size from 5 lakhs to 25 lakhs, restricting weekly options to 1 expiry per stock exchange per week, limiting the number of strike prices for option contracts, etc. What would be the impact for retail participation? Do you expect this to be a very big dampener if something comes up like this?
So Nandita, I think that majority of the participants will not be perturbed by these regulatory changes initially. It will, of course, safeguard some of the retail investors who enter derivatives market as newcomers. So it will be, I think, a good thing in terms of increasing transparency and possibly highlighting the risk that these segments have. When you look at numbers today, India now accounts for about 80% of daily derivatives volume globally, which is completely out of whack. It's a very large number. My guess is that a large amount of risk which exists in this category most likely will be addressed when there is increased volatility. Unless the market volatility goes up, I don't think traders who have deep pockets or possibly who've been in the market for last 3-4 years have seen profitable returns. They will not be perturbed with some of the changes that will occur. Two things can happen. One, if lot sizes are increased, then possibly there is a possibility that for some of the smaller contracts, the liquidity might go down. That is possible because number of contracts traded could reduce and that could cause increase in impact cost. So that is something that investors will have to be very careful in terms of how they trade these contracts. So these regulations can, as I said, address and give more confidence to new traders in terms of highlighting the risk. And second, liquidity could get impacted in some of the names.
Right, and lastly, which are the sectors on your preference list at the current juncture? Any pecking order, in terms of where one should invest right now at these levels?
So I guess the margin of safety where I think valuations are slightly better. A is BFSI, particularly the lenders. I think the margin of safety is much better. Of course, you have to be very, very careful and bottoms up in what you choose. Second is the healthcare sector. Again, I think barring 2 or 3 very large pharma names where valuations have run up, on the whole, I think the sector can still offer value and better margin of safety. Third is where I think opportunities exist is auto ancillary, specifically auto OEMs, two-wheelers and auto ancillary, which service this part of the segment. There I think also there are some green shoots happening. Fourth area where I think there is some value emerging is purely from a bottoms-up perspective, some FMCG companies. You can't broad brush them and pick up the bigger ones, but I think there are 2 or 3 companies where volume growth is picking up and coming back. Although valuations overall could still be a concern, they are not like ultra cheap or so, but from a defensive standpoint, they could act as a good buffer in your portfolio. So these are the 3-4 areas where I think there is opportunity.
All right, Sahil, with that, we'd like to thank you for taking out time and joining in this morning. Always a pleasure chatting with you, and I wish you a happy weekend.
Thank you.
Well, with that, let's also bring on board our technical guest for today. Joining me is Raja Venkatraman of NeoTrader. Raja, great to have you on the show. As we were expecting a positive open and, Nifty IT to fire up index and, push it towards 25,000, that hasn't really happened yet. But we are flitting between green and red. in terms of resistance level on the higher side, what is the kind of level that you'd be watching out for today? Looking at the open, do you think there's still a possibility that we can stage a good comeback? Because we did that yesterday as well.
Yeah, good morning, Nandita. So, like we have been noticing, the markets have been surprising everyone. While we expected downside yesterday, markets revived quickly and headed higher. And today we expected the upward traction to continue, and it actually reversed from there. So, what the market is signaling is that the trends are definitely uncertain, and as we can see, the global cues are under some pressure, and that's why we are now noticing that is a reflection here. Though we are having some very strong tailwinds in the IT space, the other stocks doesn't seem to be performing, and that is seeming to be influencing a kind of negative bias which is there in the market at the moment. But then, when you take a look overall and when you see what is really happening, you can notice that the stocks are witnessing a pullback, and then quickly there is a buying coming in at lower levels. So what the entire activity is signaling is that every dip is a buying opportunity. Now, when you take a look at the markets are currently offering us a dip buy opportunity. So one should actually be ignoring the negative or the redness which is seen at the moment, because one tends to definitely associate it as a sell-off, and one would be quick to liquidate their position. But then when you are looking at an event coming up, well, we may say that it may be a big event, it may be a small event, but then overall, it is an event of significant importance. So I feel that whatever trends are persisting at the moment should continue till the budget. There could be some sell-off which could happen, and the lower levels which I am expecting the market to hold is around 24,500. And as long as this level continues to hold, I do believe that there is a buying opportunity at every decline. There are a lot of strong trended stocks, a lot of sectors that have opened up, and one may not stick to the traditional sectors which were earlier, like say auto, banking, FMCG. So there are a lot of other sectors also that are opening up, and a lot of stocks are also performing well. So when you take a look at the whole scenario, and also when you take a look at the option data, so yesterday the 24,800 was a key level to watch out for. So right now market is trading just at that level. Few corrections here and there should not be of given too much importance. Yes, we were expecting Bank Nifty to perform, and that's what I have been calling out, that Bank Nifty would be the key sector to watch out for. And if it were able to sustain above 53,000 at least for a couple of days, we will definitely see a very big shift in the entire space. So I'm waiting till the budget. Trading low is the agenda for now. And investing should be put on hold till the budget is over.
Okay, that's the view then. Your strategy that should be ahead of the budget. But how would you trade into an Infosys 52-week high, 4% up? Would you take some profit off the table, or would you stay invested?
Yeah, I would agree with the first part of your answer, which is taking profit off the table, right? Because there are a lot of people who were not so positive about the Infi 3 months ago, and suddenly everyone wants to buy Infosys. But then at this juncture, I would not be buying into Infosys. I would wait for a reaction. Now, if your question is what is the reaction level which I can buy into, the levels will be around 1750 to 1775. So till I get a reaction into that zone, I would not be a buyer in Infosys. But then yes, IT sector is definitely the sector to be in right now. And every dip should be bought into rather than chasing a stock, because you are always getting a dip in this market, and we will continue to experience this because this market has moved up, because many of us would not participate considering that the higher levels have been reached, but then the market has defied all our beliefs and it has continued to head higher. So any dip would bring back all the non-believers onto the game. So I would do believe that the dips buying is the strategy going forward for the next 6 months.
Okay, dip buying should be the strategy going for the next 6 months. But before I come to queries, I want to get in your thoughts on a CET. Tire stocks have been on a roll off late, but CET reported numbers. There was some bit of margin pressure. Today it's reacting down 2% or thereabouts. But does the dip offer a good buying opportunity now, or are some of these tire stocks looking a bit overbought on the charts?
Yeah, the tire movement is directly relating to its rubber prices, and lately the movement which we have seen right now in CED is a small recovery which we are seeing right now. But then overall the trajectory continues to be a little sluggish. So I would be very careful. Yes, the results does bring out the best in this stock that as you have seen over the last 1 year. But then right now, I would be a careful buyer here because unless it crosses around 3000 levels, it would not witness a strong upside. So if you were to buy into CET, then divide your participation in parcels, buy some here and wait for a cross above 3000.
Okay, that's the view on a CET. But then on that note, let's shift our focus to all the queries that are coming in from our viewers this morning. The first one is coming in on ITC. ITC has given a good double-digit return in the last 1 month and edging towards a 52-week low. But 500, would you expect that level anytime soon? Are the charts signaling some bit of an uptick from here?
The ITC has been the darling of the markets, the darling of the investors, but the entire FMCG sector has been sleeping for a while. Now, finally, after a long slumber, the entire FMCG pack has woken up, and likes of ITC, Britannia, all of them seems to be doing well. Marico, Dabur. So all the overlooked sectors are now getting some attention. You can talk about FMCG, IT, cements, specialty chemicals. All these sectors are some sectors that are going to thrive now because they have not seen a strong upward traction. So it's a good ploy to divert some of your funds if you have to the FMCG space, and amongst them ITC definitely is a good bet.
Okay, hope that answers your query. ITC is a good buy. But the next query is coming in from Satya CK. Wants to know your thoughts on a Patel Engineering as to whether one should enter the stock with a 1-year time horizon. The stock has been in a downtrend. Of course, it has been in news as well. MD has passed away recently. If you look at the returns in the last 1 month, we've seen a 17% negative return on the stock. 59.50 is where it's at. With a 1-year time horizon, would you advise getting into this?
Yeah, Patel Engineering has slipped into a sideways phase for almost the entire year. Not much of traction which we have seen. Now, if you were to invest into this counter and if you're having a 1-year time horizon, then definitely you can expect a target towards 75. And yes, it would be a slow mover. So while the markets are buzzing with a lot of action stocks, so if you are a already existing holder, you can continue to hold. But then if you want to invest into it as of now, I would suggest it's an avoid.
Okay, that's an avoid. Hope that answers your query, Satya. But the next one, some of these shipbuilding stocks, they continue to be in focus. I have a couple of queries coming in on GE Shipping as well as Mazgaon Dock. Renu Keshwar wants to know your thoughts on GE Shipping, and Advait Joshi wants to know your thoughts on Mazgaon Dock. Keeping the budget in mind, should one take positions? Because Mazgaon Dock, I'm looking at the last 5 session chart. It has kind of cooled off after the stellar run it has seen, or the kind of up move that it has resumed post the election verdict. Ahead of the budget, should one take a bet here? Trading bet?
So first of all, I would like to say that GE Shipping is showing a profit booking scenario. So those who have already invested into GE Shipping can book profits right now. And the levels to buy would be around 1200. So 1200 to 1225 offers a good buying possibility. So if you are keen to buy into the stock, then that would be the zone. And Mazgaon Dock, as we know, is witnessing some stellar run, and the sharp run which we have seen over the last entire year has been, especially the last 3 months, have been quite prolific. So at this juncture, if you witness some profit booking, it's it's part of the whole move. So now, where could be a good area to buy into Mazgaon Dock? It will be in the region of around 4800. Yes, the level seems to be a bit far, but not much considering it's just a 10% further decline from here. Buying right now would not be a very suitable level to buy into, because the risk to reward would not be favorable at the moment based on the current setup right now.
Okay, that's the view on some of the shipbuilding names. We had 3-4 queries coming in on these stocks. Hope that answers your query, but just couple of more queries to go. I want to get in your thoughts on an Asian Paints. Reported numbers, they were weak, margins multi-quarter lows, of course competition concerns. A lot is happening in the paint space, even though some of these paint makers have recently taken a price hike after quarters of price cuts. But any changes in terms of the chart structure now? Jeet wants to know your thoughts on Asian Paints in particular, but how would you view some of these names like Berger Paints, Asian Paints on the charts now?
Yeah, honestly, I am never an advocate of the paints name and the paint sector as a whole. So the Asian Paints, if you were to talk about, it has not shown any kind of move over the last almost, you can say, 3 years. So every time it has risen around a 500 to 600 point range. That's the range it has been moving in. So when it is moving in such a range, and considering the nature of the stock, you can observe that there are continuous profit booking at higher levels. So I would avoid this stock as of now.
Okay, Asian Paints is an avoid. Jeet, hope that answers your query. The last query really for the day has come in from Alex. Wants to know your thoughts on Lalpath Labs as to whether one should take fresh long positions here. Your advice?
Yeah, Lalpath Lab definitely is on the buying side. There have been, it has made a nice double bottom, and the stock seems to be heading higher. So the targets which one can expect in Lalpath Lab is closer to the region of around 3,400 within the next 3 months.
Okay, that's the view on Lalpath. Alex, hope that answers your query. But with that, we've come to the end of the query segment. But Raja, before I let you go, what would you be keeping on your radar and what would you recommend for viewers?
Yeah, one stock which I would like to recommend is Naukri, Info Edge, and this stock has been performing quite well. And after a phase of consolidation, I believe that this stock is set to move higher. So one could look to buy it at current levels. If you are a multi-day player, you can look tips towards 6950 to buy into, because the target which I'm expecting on for a multi-day target is around 7300, and an intraday target is around 7100. So that's one of the stocks. And the other stock which I would like to recommend is LIC Housing, that has seen a good dip right now. And I believe that with the budget coming in play, I feel that there could be some traction emerging in LIC Housing Finance. So those who are on the trading side should definitely consider this as one of the counters for the August series.
Okay, those are the recommendations coming in from Raja. With that, Raja, as usual, thanks a lot for taking out time and joining in. Always a pleasure chatting, and I look forward to chatting with you next Friday as well.
Yeah, thank you. Bye. Good day.
Thank you. Good day. Well, with that, let's take a look at where the markets are at the current juncture. We are still in the red. 24,750 is where we are at, 50 points lower. But remember, yesterday as well, we were, on an iffy note when we started, the day. But towards the end of the day, of course, we saw that we hit fresh highs, and Sensex also clocked that 81,000 mark. So yeah, we'll wait and see whether or not the texture of the market changes as the day progresses. But with 25,000 in mind, we are ending this edition of Opening Bell. Infosys, IT pack in fine fettle. Top 5-6 Nifty gainers are from the IT pack. Asian Paints, by the way, has also managed to emerge as one of the top gainers on the index. But with that completely timed out, thanks a lot for tuning in. But stay tuned to Moneycontrol for all your other news and updates.